Well, CSL has spent $1 billion developing a new drug it hoped would reduce the risk of a second heart attack after the first one. But today the company had to announce that a phase 3 trial involving 18,000 patients did not meet its efficacy endpoint, which basically means it didn't work. Investors sliced CSL share price nearly 5% or $7 billion, although in context, the company's value had increased by $35 billion since October. Today's corporate good news was JB Hi-Fi beating expectations about its profit and jumped 7%. The market fell 0.4%, mainly because of CSL, but weak resources stocks as well, and that was after commodity prices mostly fell, apart from the oil price, which went up almost 1%. In New York, the S&P 500 index went above 5,000 points for the first time, driven by tech stocks and in particular the hype around artificial intelligence. And the Australian dollar was steady at 65.2 US cents, which happens to be exactly the same as it was when COVID came to town in 2020. It touched 80 US cents in February 2021, but since then it's been downhill all the way. And finally, here's a graph of the cost of a 30-second ad during the Super Bowl broadcast today. At the first Super Bowl in 1967, it was $40,000 US. This year, $7 million, or more than 10 million Aussie. That's a 57-year inflation rate of 9.5% a year, more than double the actual American consumer price inflation rate. But that's probably okay because twice as many people watch it now, including a lot of people not very far from here. And that's finance.